from Share Navigator, and this is a very quick tutorial on setting up your charts. Now, we're using the IG platform to demonstrate. You could be on FinanceYahoo.com, TradingView, Interactive Brokers, whatever your charting package is. I'm just going to show you what I look for, how I set up my charts, and the indicators that I look for, and then drawing support and resistance and what to watch out for. And we're going to use the S&P 500 as our chart here to look at. So first things first, this is a daily chart and it's a candlestick chart. What does that mean? So one of these candles here represents 1 day of trading. A green candle means that the S&P 500 opened at a lower level but closes at a higher level on that given day. And a red candle is the opposite. It means that it opened higher, closed lower. So red isn't necessarily, or green, an up day or a down day. It just means that the closing price was either higher or lower than the opening price. That's all that means right there. Okay. So what we have here is daily candles as such. Okay. So the first thing I want to add to my chart here is I want to add moving averages. So to do that in the IG index platform, you have to go into the chart. Watch what happens when I move my cursor outside of the chart. All of these icons here go. So you actually have to be in the chart here, click on the 3 bars here and click on moving average. And what's going to happen is it's automatically going to populate with a number of moving averages. Now to edit them, you click out of it and you can see in the bottom left hand window here, we've got MA, 20 and 50. So that's just what they've come up with standard. Now, I want the 200-day moving average. I want my line to be green, and I can change the thickness of the line here. I like the middle thickness here for my moving averages. And then the 50-day moving average, they've got it highlighted in blue. Maybe I prefer purple, for example. So I'm going to change that to purple, click on apply. So now what you can see here is I've got my 50-day moving average in purple, my 200-day moving average in green. Okay. All that is, by the way, these are simple moving averages. What that means is, in the case of the 50-day moving average, they've taken the last 50 days closing prices, averaged them out. That's all it is. And you know, as you can see, this moving average is pointing upwards. It's an uptrend. Same with the 200-day, and then all of a sudden that starts to flip over. That becomes a downtrend. So that's all we're doing with our moving averages for now. So just how to put them onto your chart. Okay. The next indicator that I like is adding in is actually the RSI, the relative strength index. So that's it, guys. That's all I use is relative strength. So just a very brief tutorial. I've included this in the course. Relative strength is when the index gets below 30 here on relative strength, it means that it's oversold and that a reversal may be imminent. When it gets above 70, the opposite is true. It's considered overbought and may be due for a pullback. Now, I just want to highlight something to you. This tends to work really well for the S&P 500 when RSI is below 30. It doesn't really work so well when it's actually above 70. Let me show you examples. Here's examples in the past when RSI was above 70. Look, there's where the S&P 500 was. It actually didn't pull back. It just kept going up. So I wouldn't use the RSI indicator as a signal to trade or anything like that from a bearish perspective. It's just a nice to know that it's overbought and maybe due a pullback. That's all you can take from that. On the flip side, I've done a study on this RSI, by the way, when it gets below 30. I did a 50-year study, and actually anytime it goes below 30 and crosses back above it, 85% of the time if you buy in, you will be in profit on the trade. Okay, so that's it. That's just in terms of the indicators I use. Pretty simple. So the next thing I look for then, guys, just in terms of drawing support and resistance. Traditional support and resistance is, you know, areas of commonality. So for example, you can see clearly here, up at this point here, that's an area of commonality at this moment in time. So I want to draw a line right across that to highlight that on my chart. So I click on the pencil icon, I look for horizontal, click on horizontal, and there I go. So that's a horizontal line, and I can see recently, oh, that horizontal line got broken. That was a resistance line, and then look, we're through it. So that's a really bullish sign, the fact that this previous resistance was broken and now we've broken up above it. That's a really positive sign for the S&P 500. So just for me personally, I color code my support lines. So my resistance lines are red and my support lines are green. Now, this was a red line for me, but now that we've broken above it, it actually becomes a green line. So I'm going to edit it. I'm going to edit on the line, change the color here to green. So all you do is right click on the line, click edit, and now all of a sudden that's a green line. So that's now a support line for me. In other words, what that's telling me, the index is likely to pull back to this area of commonality and it might find a bit of support here at about 7,000. That's what that means for me. So now if I wanted to draw other support lines on this, I would look at other areas of commonality, and I can see right in here is what I call a lot of noise in here. I'm going to draw another support line in here. So what that's telling me now, the way I interpret this is, if this support line doesn't hold here and we break down through it, I'll color code that red, but then I'm kind of looking and going, oh, the next support line is actually way down here at 6,800. That's what I'm interpreting from those support lines, okay? So you can do that all the way down and all the way up to generate many support lines. They're the only two I'm interested in for now. So just in terms of support and resistance, moving averages are also considered support and resistance. And actually, one of our rules is that we don't place short put trades when the S&P 500 is below its 200-day moving average. This is probably one of the most broadly watched indicators out there, okay? And if it's trading below it, it's a sign of weakness. Obviously, the recent price trend is below its 200-day moving average, and we just stay out of it and we wait for the S&P to reclaim that level. And there's a reason for that. Statistically speaking, where we would avoid nearly 90% of all market crashes just applying that logic, okay? And that's the reason why we look at that. But they also act as support. So now that we're way above it here, in fact, we could fall all the way back down here to this 200-day moving average at, again, look, nearly about 6,800, and that will be a support area, and the 50-day moving average isn't far behind it. So these averages can act as support and resistance too. And if you, in fact, if you look at the shorter term one, the 50-day, look at that, all the way up here, it acted as a support line. It pretty much tracked it all the way up there. So that's another lesson on support and resistance, okay? I'm just going to delete these lines here just for 1 second because I want to show you talking about establishing trends. So usually when an index is above its 200-day moving average, you already know it's in a longer term uptrend. However, the best thing to do is to zoom out over time. So you can see here, we've brought in data all the way back here to 2022. But if you wanted to bring in more data, change your chart from a daily to a weekly. And all of a sudden you can see a lot more data. And here's a cool little feature I want to share with you now. I'm going to draw an uptrend channel. You can clearly see that the market is in, from this point here, it's in a clear uptrend here. This, by the way, is your COVID low right there, okay? So let's draw an up channel. And all you do is click on, again, the pencil icon, click on the channel. So you start at your bottom left here. This is where the start of your uptrend begins, let's say. And then you draw a line all the way up. You drag it all the way up to here. And you click it again. And then all of a sudden you drag it up to see, can you join the tops here? So you can see that's a very clear up channel. Again, if you wanted to color code that, that's color coded in black. That doesn't me. It's an up channel for me. So up channel is green for bullishness. And I'm going, okay. So I've zoomed out to my weekly chart to establish, oh, we're in this significant bullish channel here. But what I'm getting a warning here is, oh, we're at the upper end of this. And look what tends to happen when you're at the upper end of these channels. They tend to give it back some of the gains. It doesn't mean that it's bearish. It just means that we might have a short-term breather before we go higher again. So it'll keep tracking this line all the way up, okay? So now we come back into our daily chart and we can see here, oh, look what that means here. Look, we're really tied up against this channel. So that would alert me if I was doing an option strategy, maybe there's a bearish trade along the way. I'm looking down at my RSI. Oh, that's overbought as well. There's two indicators telling me we might have a bit of a pullback. It's not an exact science, guys. It won't tell you or guarantee it that it's going to pull back. There's no indicators that do. But all we're looking at here is trends. And then what I look for then is where can this pull back to? So again, I'm going to put back in my support line. I'll click on my horizontal line, and I know my support line is in here, and I know there's one up just above it. So I'm saying that if there is a pullback, our first pullback area is going to be 7,000. And if that doesn't hold, we're going to pull back somewhere below that into around the 6,800 level. So it's as simple as that, guys. Let the trend be your friend. Don't fight the trend. The trend is bullish. I've said it all along. Even when this was happening here with Iran, I was saying as long as the US economy remains out of a recession, we're going higher by the end of the year. Well, we've already made a new high. I think we could go as high as 8,000 by the end of the year, but there will be pullbacks along the way, and I think this is going to be one of those pullbacks. So that's why we're going to switch our strategy slightly to a slightly bearish strategy for a short period of time, and then we go bullish again. Okay, this is just a quick interpretation of how to set up and read your charts. I hope it helps. If you have any questions, please reach out. Thanks and bye for now.